Good day and welcome to a new update in which we're going to cover the price action of Bitcoin and we're going to look at what is happening in the macroeconomic events. And today we're going to discuss everything surrounding why today's data is very important to look at. But before we continue, make sure to hit the like button, subscribe to this YouTube channel, also check out our free trade letter which we provide 3 times per week with all the data you must know if you're trading in the crypto markets. Also, if you want to follow my portfolio, make sure to check out the platform. And then second, we also have multiple other traders sharing their portfolio and making trade ideas within the platform. Also, this video is sponsored by our sponsor BitGet, where you can get up to $8,000 in deposit bonuses and 15% discount on trading fees and exclusive trading opportunities, which is a trading competition which will be launching soon on this YouTube channel. Now, when we're looking at the entire case of the price action, we can conclude that Bitcoin and crypto have been into a relatively boring state. Bitcoin is correcting, still relatively hanging towards a potential upward trend. Ethereum showing way more strength than Bitcoin at this point, but altcoins are suffering, which is quite usual, which we've also been seeing in 2019. What did we see today? Well, first, yesterday we had the thesis of the testimonial of Powell, which was declaring why he is continuing with his policy. He was actually stating that he's most likely going to do 50 bips in March. It's very unusual for a chairman to adjust his policy from 25 bips to 50 bips or to increase the process during the actual impact of the actual policy, because if he starts to do that, it's disrupting the economy even more. So it's not common to do so. And in 1995, we'd had the last time that this actually took place. Markets aren't really expecting this to happen at all, and they are not pricing it in, but we'll get to that in a little bit. First, we had that yesterday. We also had the first important unemployment data, which was more positive than expected, as we can see with the ADP non-farm employment change, which is the number of people employed during the previous month, and it is more positive than expected. However, today we've got unemployment claims, which is the number of individuals who filed for unemployment insurance for the first time during the past week. What this tells us is that the data which was forecasted was 195,000. The actual data which came out was 211k, which is worse than expected. So more people were filing for unemployment insurance in the past week. Why is that it is important? Well, what we have seen is one of the most extensive and heavy and impactful policies and fast-paced policies that the Fed has been doing through previous 2022. They still believe that there is going to be a soft landing taking place, which is probably a fairy tale if he starts to do 50 bips hikes from March 23 onwards. If he doesn't do that and he continues with 25 and he stops the actual hikes, it means that the heaviest part of the policy has been taken into account already and has been taking place. However, the impact of the actual policy takes between 6 to 9 months before it starts to hit the real economy. So we are on the edge of the impact, right? So we are on the edge of that it starts to show up in the economy as a whole. What do we see here is the dates that we had in 2022 and 2023. Here we've had, in February 2023, we've had 25 pips. But what it tells us is that it started to accelerate in May towards 50 bips. And then from June on, we've had 75, 75, 75, 75, and 50. So most of this entire increase in rates have been taking place in the second half of 2022. And then you have to put another 6 to 9 months up on that actual date. So the hike of July 27 is probably going to see the impact right now. It is going to be from February towards April. September, November, and December, the additional hikes, which are usually the ones that actually have the largest impact as it compounds the entire impact as a whole, that starts to come up in the coming few months. So what do we see is that if the unemployment data, which we saw today, shows that the more people are filing for unemployment, which is the highest rally since October of 2022. We've had one here as well. The moment that we are continuing these numbers on next week, or the moment that we're going to have data tomorrow, which is the unemployment rate for 3.4%, and it's going to be higher, the less likely the Fed will continue its policy, and the faster it has to adjust past the policy or swap it towards a case where it's even going to decrease the entire rate hikes. So that's why it's important to look at this data, because the two metrics are inflation. We got an event coming up next Tuesday with CPI and on Wednesday with PPI. And the other one is labor markets. And if the labor market started to become a little bit wider, which means that there are more people filing for employment, so the employment rate goes up, that is the moment that the Fed also needs to halt its entire policy. What do we see as an impact of the data here, as it's pretty long introduction? We have to look at a few important data points, which is the dollar in itself. If unemployment starts to accelerate, it is a bad case for the dollar, because in itself the economy starts to weaken, probably consumer confidence goes down, probably consumer expenses are going down, retail sales are going down. So if unemployment starts to rally up, it is a sign that the dollar is probably turning around here. And we also stated earlier that we are looking for a case where we are taking this high here. We've done this, and we are now dropping back into the range, which means that if the dollar currency index is not going to get above 106 points, most likely we are going to turn around here, and we've got our relief rally on the dollar. Now, what do you have to look at even more? That's the yields. The yields are showing what the markets are pricing into government bonds at this point. The federal funds rate is already close to 5%, and they expect it to rally towards 6%. And as a result, yesterday and the day before, Powell stated that he was going to increase the hike in March towards 50 bips, or most likely, and he is also going to increase the Fed terminal rate to 6%. So then the 6 months and the 2-year yields should be relatively close to the data, and it shows you what the markets are actually expecting from here. Now what we see is the 6 months is currently priced at 5.08. So definitely seeing an increase here, but today we are setting off a little bit. The higher you go on the data, the heavier the impact is with the unemployment claims for today. I'm not saying we are reversing yet, but we're seeing a thesis here that the 2-year yield starts to turn around. So markets are not betting on a case that the Powell will continue its 50 bips rate hike policy in March, because then he also has to do it in May, and they are actually expecting it to be 25 bips, and potentially we could even be having a pause. So we're seeing a sell-off here, which is a turning point. If tomorrow is going to be a similar day with unemployment rate increasing, we probably are going to turn around here. Actually, if CPI comes in next week too, and it's going to be lower than expected, as now the metrics are proper, we're going to see a pretty heavy impact when it comes to the yields, as yields turn around quite substantially when they have been accelerating like this. We've seen that in the history as well. Going back towards Bitcoin. Bitcoin is currently having some intrinsic market shocks, as the market has been getting into Silvergate collapses at this point. Could be that Silvergate is collapsing today or tomorrow. We might be having a slight black swan event from that, but there are other companies taking over. There are other solutions, so that's just a temporary shock. Then we also have the Mt. Gox release, which is a fearful event for people inside the crypto markets, but the actual impact is taking place now and not when the unlock starts to happen, because when the event is going to dwindle over or fly over, then it's just turning around, and then we're getting back towards equilibrium. And if we're looking at the indices overall, the indices are starting to show some bounces here, as we now with this data, and if this data continues to be weak, we're getting back into the fact of the potential short-term soft landing bullshit relief rally before the Fed has to adjust its policy and the real impact on the economy starts to take place. So in this case, we are seeing an impact that the Nasdaq starts to rally up a little bit. Also the S&P starts to show slightly a strength, and gold starts to show its impact as it's bouncing back up. Usually in these times gold starts to do really well, so you would assume that Bitcoin starts to bounce back up as well. We don't see it yet, especially given the fact that tomorrow is Mt. Gox date and there are a few other factors taking into account when it comes to crypto. However, we are in higher time frame support here. Most likely case what we can be seeing for Bitcoin is this case, in which we just easily take out the low. I'll just make a clean chart. The unemployment data is proper for Bitcoin as a whole, as it's also a risk on assets and therefore could be granting itself a potential case of upwards momentum. What you want to see in confirmation of the upwards momentum is that we take out this low, which we have been building up here. Then the reclaim is the trigger for continuation upwards, or we have to get back above 22k and then we can continue moving. However, from an investment thesis perspective, the data we get right now will probably be suiting a case that we're going to have a further relief rally taking place in 2023. We are not sure if we're going to hit 19.7 first. We are not sure whether we're just sweeping this low. We're just building into scenarios, and from an investment perspective, you want to be into long positions. That's the update for today. I'll be back tomorrow with the altcoin portfolio. I'll be back during this weekend as well with fresh new updates. Make sure to subscribe to this YouTube channel and see you soon. Ciao.